Everything you need to know about trading psychology. Why does your mindset matter? When your mindset isn't right, you should never place trades as your mind is too foggy to analyze and make the right decisions. It's the same when driving a car while sad or angry. Researchers in the US have compiled a crash-based data that reveals drivers who are sad or emotionally agitated are 10 times more likely to be involved in an accident. You are more likely to gamble and take the wrong trades when your mindset isn't right. How I felt losing trades. When I first started trading, I would risk everything on a trade and I would get lucky until one time I lost it all on one trade. I would be sad, I would feel anxious, and the people around me noticed that I wasn't my best. The pressure for each trade was just too high. I had to be right all the time. I left myself with no option but to win each and every trade. I would feel like a failure when I lost, and I honestly would not wish the feeling on anyone. The correct intention. Before you place trades, you need to have the right intention. Are you trading to double your account? Are you trading so you can make money every day? Are you trading because you think it's easy? Well, if you said yes to any of those questions, then you have the wrong mindset. That's okay if you're willing to correct it right now. See, you need to understand trading isn't a get-rich-quick scheme. It's an investment you make with your capital and time in order to grow your skill and capital long term. Important things to know. Number one, it's an investment and not a job. Most traders think they are going to make a specific amount each and every month, when in reality that is not the case. Trading isn't like having a job where you give your time and in return you're given a salary. If you come in with the mindset of being paid every month the same amount, then you're in for a ride. Remember, trading is an investment, which means you put your money to work. Your capital can fluctuate depending on if you have a profitable month, break-even month, or a losing month. You can control what trades you take and your risk per trade, but you can never control the outcome. Number two, if in doubt, stay out. No matter what strategy you're using and how good it is, you should never take a trade that you doubt. There will come a time where you spot a setup that looks okay, but you feel like you should stay out. Always stay out. If I lose a trade after I had doubt, I would be much more disappointed than if I stayed out and that trade was a winning trade. Remember, there will always be more trades to take. It's not the last trade you're going to take. And yeah, just to add a bit more to it, sometimes you'll have a very good setup, but there's just this one thing that you're doubting, then just stay out. FXView is a regulated broker that allows you to trade Forex, commodities, and indices. They offer a raw ECN account and have leverages of up to 1 to 500. So let's check out their deposit and withdrawal options. So as you can see, the minimum deposit is £5 or $5. And let's check out the withdrawal times. Yeah, the withdrawal times take just 1 working day. That's perfect. And yeah, they also have a education section where if you go on the Forex glossary and you click on candlestick chart, it tells you the meaning. So this could be a way for you to learn very quickly. So check that out. And yeah, make sure to open a demo account with them. They seem like a good broker. Check them out. Try it and see if it's for you. I'll leave all the links in the description below. And yeah, check them out. I've always, gone through this, and now what I do, I just stay out, right? I don't try to justify it. I don't do anything. I just stay out because I know in the future there will be more trades. Number 3, everything has to be systemized and not randomized. Before you place trades, it's important that you have a strategy and a list of rules to follow. Otherwise, you're going to be gambling. Your strategy should be repeatable and scalable. So what this means is that you have a list of rules, right? Write it down, whether it's the 20% strategy or it's something that you're designing yourself or developing yourself. Write it down. You want to have a list of rules that you can consistently between Monday and Friday apply on a daily basis. If you don't have these rules, then you're going to be a gambler, meaning, you're going to buy when the market goes up, sell when the market goes down. You're going to copy other people. If the news, if the news is telling everyone gold is going to weaken, you're going to sell gold, right? You're going to follow others. And if you follow others, then that's a nightmare, trust me. How to deal with losing trades? Well, you don't deal with it. There will always be losing trades, and every system comes with losing trades. Your first aim should be to follow your strategy and use risk management, which is 1 to 2%. And if you lose a trade, then you should check to see what went wrong. Did you enter the trade too early? Did you really enter a valid setup? Did you check the news? If you can't establish why you lost a trade, then it's most likely that you followed all your rules and that it was just a losing trade. You need to also avoid taking a trade right after a losing trade. If you take a trade right after you lost a trade, then you're likely to have another losing trade. Give it a few hours or even a day, come back refreshed. Remember, you don't need to be right all the time to be profitable. And also, the only reason why you would be angry over a losing trade is if you risk too much expecting, to make more profits. So control your greed. Why too much hope in a trade is bad. Hope is good when not applied to your trades. Having too much hope on a trade will destroy you. You need to break free from the outcome of a trade. When you have hope on a trade, it's because you aren't applying risk management. You're afraid to lose because your account will be wiped. Having hope on a trade is a dangerous path, and it will lead you to becoming a gambler. Just to give a bit of context, I remember when I was, gambling, which, when I say gambling, I mean, I didn't have a strategy. So when I was gambling, I had so much hope on a trade. It would be to the point where I would place a random trade and I would just close the screen. I would just hope and pray the trade went in my direction, right? You don't want to live like that, or you don't want to trade like that, because your mind is going to be foggy all the time. You're going to be stressed. You're going to, it's going to destroy your mind slowly, right? So you want to make sure you avoid having hope. The only reason why you need hope in trading is because you need it to go well. Otherwise, everything will be taken away, right? So have risk management. When you're not applying risk management, you resort to having hope. How to deal with winning trades. So you just banked 200 pips and now you're happy and you're feeling on top of the world. If you don't step away from the charts right now, you will soon see yourself risking it all to make even more. Like they say, a fool and his money are soon parted, and this is especially true when trading. When you have a winning trade, your aim should be to step away from the charts and to take a break. The more you're on the charts, the more likely you are to place trades. So control your greed. Again, I'm going to add some context now. So I remember back then when I used to gamble, I used to have some big wins, right? You would think if I banked 200 pips, I would step away from the charts, withdraw some profit, or would just, at least stay away from the charts. The thing is, I didn't stay away from the charts. I would look for more setups, or I would just, look to analyze, and, soon, I went from analyzing to risking it all to, double or triple, right? If you don't walk away, then you're going to lose more money, right? So learn to walk away. Remember, you're trading for freedom. You're not here to be on the charts all day. Freedom is what you're trading for: financial freedom, time freedom, and all of that. So learn to walk away when you have won. And also, one more thing is that if you win a trade and then you take another trade and that second trade turns out to be a losing trade, trust me, you're going to, feel like placing another trade to make back that loss, right? So you don't want to, you don't want to be in that frame of mind where you're trying to make back money. Okay, so just stay away. When you win, walk away. And yeah, honestly, mindset matters. It matters so much. It takes time, right? It's not something you can develop in 2 weeks, right? It takes time. You need to learn yourself. You need to learn, what your bad traits are, right? It takes time. Don't expect to develop your mindset in just one video. So yeah, learn to grow and learn to not repeat your mistakes. That's the most important thing. We're not trying to be perfect. We're trying to learn from our mistakes. So yeah, I'll see you on the next episode.